Welcome to another S&P 500 analysis. Today is June 19, 2021. Before I begin, let me wish all the fathers out there a happy Father's Day. The S&P 500 sold off after the announcement from the Fed that it is planning on 2 interest rate hikes in 2023. That was a bit surprising to the market, as this means the Fed is going to increase rate earlier than the market had expected. But that's not all. If you have watched my midweek S&P 500 analysis video that I put out on June 16, 2021, you would have heard me saying that the next thing the Fed will say is that it might even start raising rate in 2022. And lo and behold, 2 days later, here is a headline from Bloomberg dated June 18, 2021, stating Fed Bowler said rate hike could start in 2022. Did the Fed lie to us? Not at all. If you have followed these clowns long enough, that is how they telegraph their intention without shocking the market too much. They will slowly walk back, or in this case, walk toward the real timing when rate hike will start. So when that happens, they expect the market has already started to price in the rate hike. And that is why we watch the price action and let the talking head throw out their pros and cons and when and how much the Fed will hike, yada yada yada. So in this S&P 500 analysis video, we'll look at the S&P 500 and the other major market indexes, the sentiment, and the market internals, 10-year yield, US dollar, and gold. And at the end of this video, I will share with you the trade location that I'm watching on gold. Let's start with this S&P 500 weekly chart here. As you can see that it finally broke this 10-week moving average and closed below it. Also, it broke this wedge here that I'm pretty sure a lot of the market participants are watching this wedge here. And I have also put up this all-time closing high back in May, this 42.3260. And it's been trying to get back above that level, and it repeatedly fell before this breakdown. So right now we are looking at a weekly chart of the S&P 500 that last week it had a range of 92.76 points and a gain of 83.29 or 1.96%. So you can see that the 10-week moving average is kind of flattened out, but it's still above this 40-week moving average. So we kind of keep an eye on it to see how much more damage or how much more pullback the S&P 500 will do before it's bounce back up and put in another new all-time closing high. Remember, there is still a Globex all-time high from the E-mini S&P 500, and that indicator has been relatively reliable, in the recent past. So I would not discount that until, it doesn't work anymore. So we'll continue to watch for a bounce from the S&P 500 toward the another all-time closing high. Before I start reviewing the sentiment and the internal, I'd like to let you know that I will be posting a video that explains the sentiment and the market internal indicator that I monitor. So for those that are new to this channel or unfamiliar with some of these indicators, be sure to watch this video. To make sure you will be notified when I have posted this video, subscribe if you haven't done so. And for everyone, turn on the notification so you will be notified when I post this video. Now let's look at the sentiment. And looking at this sentiment chart here, as you can see, the VIX, the fear index we call it, have creeped up and come up to above the 20 level. So it got into this zone here now. So we're going to see will this thing continue to move up into the near that 30 level at the upper zone area before we might see a little bit of a pullback from there. So definitely the fear factor is increasing from the market participant. And also you could see that the put call ratio also finished the week at 0.66. So it's getting close to this 0.75 level here. As you can see, it's start to creep up. Remember earlier in the week, it was down here below this 0.5 level here. So definitely the market participants are getting a little bit more fearful and starting to take risks off, and might even start putting on a little bit of a hedge to protect some of their positions. And looking at the up-down volume ratio for Friday, it is 6.19, 6-1 in favor of the downside volume. So, and also the daily advanced decline, there were over 1,700 more declining issue than advancing issue, and the S&P 500 closed down 55 point or 1.3%. So, although a lot of people might say that it is probably due to the quad witching Friday and that sort of thing, but in regardless, a sell-off is a sell-off with a 6-1 up-down volume ratio in favor of the down volume. That is very telling. And with 1,700 more declining issue than advancing issue, that's also another piece of information telling us how bad or how broad that market sell-off was on Friday. And looking at the New York Stock Exchange 52-week high versus 52-week low, you see that this is anemic. 43 new 52-week high, or 43 more 52-week high than 52-week low. So although it is positive on a negative day, but you can see it is coming down ever since on June 8th. Okay, so even when it was making a new closing high on June 14th, you could see that the new 52-week high have came down quite dramatically even from this level here, which is 657, or even just this level here on June 1st, which is 424. On Monday, when it closed at a new closing high, it was only 261 more new 52-week high than 52-week low. And here we see the cumulative advanced decline line continue to pull back along with the S&P 500. So remember, we were talking about this negative divergence here on Monday when the S&P 500 made a new closing high with more declining issue than advancing issue. So that set up a negative divergence, and we were warned by this to be on the lookout for a pullback, and now we are seeing that. On Friday, the NASDAQ 100 also closed down, and it was down about 114 points or 0.81%. And that was after a previous day closing with a new all-time closing high and making a new all-time high. But look at the up-down volume ratio on Thursday when it made that all-time high. It was only 1.1 in favor of the up volume. And on Friday, it was minus 1.8. So it's almost 2 times more down volume than up volume on Friday. Right? And I see the daily advanced decline similarly to the New York Stock Exchange. There were over 1,700 more declining issue than advancing issue. So that's another sign that it was a broad market sell-off on Friday. And look at the NASDAQ 52-week high over 52-week low. On Friday, there was 18. And on Thursday, when it made that new all-time high, it was only 85 more new 52-week high than 52-week low. That is pathetic, right? It is actually no sign of strength or broad market participation in pushing the NASDAQ 100 into new high territory. And take a look at the NASDAQ cumulative advanced decline line. See how quickly it dropped off after this continuous negative divergence, right? Even up here on June 14, when it made that new closing high here, we saw a negative divergence on the AD line. Then on Thursday, last Thursday, well, again, we see another divergence in a negative. Right? You see how negative it became, and right now we are seeing the result of that. So now we're going to see pull back from the NASDAQ 100 and see how deeply or how much it's going to pull back before we could see some support. And we'll take a look at that later on when we look at the S&P 500 price action along with other major market indexes in a little bit more detail. So as you can see from the sentiment and also the market internal, definitely the market is in a little bit of a pullback phase now. Fears are coming back into the market, risk is being taken off a little bit, and we're also seeing the advanced decline clearly indicating there are more seller in there than buyer. And even though we saw a little bit of an upside move early in the week, we noticed that there wasn't much of a broad market participation. But now on the downside, we are seeing more broad market participation on the downside from the advanced decline. The daily advanced decline was over 1,700 more declining issue than advancing issue on Friday as the market sell off a little bit. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes. Looking at the daily S&P 500 chart here, remember last week we talked about this pivot high here. We're saying that if the price come down to this pivot high and we did not get a bounce off of it, then the chances are we probably will see the S&P 500 come down and retest these low somewhere in the 40-60 area, 40-50 area. So right now we're kind of keeping an eye on it to see is this thing coming down and test this low. There is a small gap here that also needed to be filled somewhere around that 41.20 area. Definitely a lot of people is watching this wedge breakdown. And also you notice that I took out that Fibonacci retracement because we booked this 100% level over here and then pulled back in. So that is no longer a valid retracement level to use. So when there's another necessity to put up a Fibonacci retracement, I will do so. But for now, we're basically watching these price level. The price level is more important than trend lines or Fib or whatever, right? Because we know that the market participant reacted to those level. So we're going to keep an eye on it, on this 40, 60, 40, 50 area. And if doesn't hold support, then we'd be looking at this 40-20. And that is also another gap down here that is waiting to get filled. And then if that doesn't hold, we eventually will look at this 39.74, 39.75 area. And here we are looking at the NASDAQ 100 daily chart. As you can see, that it made a new all-time high on Thursday and closed with a new closing high. Now on Friday, got a little bit of an inside bar here. And also, I have a Fib on here on this retracement coming up. So we'll see what it continue to move up. My suspicion is looking at the internals and the sentiment is that we will see a little bit of a pullback coming back down to this 13,713 level and also this trend line here. So let me just kind of zoom out so you can see that's the trend line that I drew in. But again, trend line is good to look at, but the more important thing is the price level because we know there's been a reaction at multiple time at a particular price level. Trend line could be just come down and touch that one particular point on the line and do whatever a lot of people think is going to do. But if we look back on a lot of these trend line support and resistance, and you look back on those locations that actually bounced or rejected, you can see that there are a certain price level there that sort of substantiate a potential support or potential resistance level. So it's always traced back down to the price level, not trend line or moving average. Because if you also take a look at a lot of the moving average, a lot of people thinking that, we got to support off the 50 SMA or 200 SMA. Trace those back and you could see that a lot of time those level where you thought you saw a support from the moving average is actually the result of some price level. And I'm looking for a potential pullback, come back down to this 13,713 on the NASDAQ 100, and especially with the weakness of the cumulative advanced decline line and also the negative divergence. So I will not be surprised to see it break this this level and come down to this 13,280, and come down to this 13,000 level and test these low and possibly even come all the way back down to this 12,200 area. So that's what I'm looking at right now. Although I believe that there is still another opportunity for the S&P 500 to make a new high, but I'm not saying that for the NASDAQ 100. So anything is possible. And looking at the Russell 2000, the Russell 2000 came close to the all-time high of 2360, and then it just fell off. Right now, it's coming back down. See, we look at this little bit of a breakout from this declining trend line here, and now it came back in. So we're basically looking at this 2195 area once again to see would it be able to provide some sort of support. And if it doesn't, I wouldn't even be looking at this trend line here. I'd be looking at these low here. So it'd be somewhere around this 2075. Because here's basically what we're looking at, right? This little bit of a balance area, okay? So we might see it all the way down to this, 2100 area and 2075 for the Russell 2000. So keep an eye on that. The first level is 2195, okay? And if it could come back up, then it has to get back above this 2296, 2297 area before we be looking at the possibility of coming back up to put that 2360, the all-time high, in play. And now looking at the Dow Jones Transportation, we said Dow Jones Transportation was looking kind of weak, and we're expecting this thing to test the support, and unfortunately, it wasn't able to find support here, and it broke down, and right now it came down to this trend line here. And let me zoom out to it's basically this long-term price channel since the March, the pandemic low, right? So you can see right now it's sitting at this line here, this trend line. We're going to see would it be able to get a bounce off of that. If it does, then we'd be looking at this 15,000 level once again to see would it be able to come back up, and it probably will encounter some resistance at this level here near the 15,300. Now, if it breaks this trend line here or this channel, then we're essentially looking at this 14,240, then possibly even get below this 14,000 and down to the 13,656. So there are a lot of repair work for Dow Jones Transportation if it does find support here near this 14,500. And for the Dow Jones Industrial, I also put in this trend line here just to connect some of the points. And you can see that it broke down from this trend line, but also I have this channel showing here that is still quite a bit away from the lower price channel trend line here. So let me zoom this in here and take a closer look on the Dow Jones Industrial. So right now we're basically looking for it to come down to this 33,000. Remember, we were looking at these these low here, and it closed below these low and below this 33,500 level on Friday. So, and there is a little bit of a gap here that still waiting to get filled. So basically looking for the possibility of coming down to the 33,000 and fill this gap. So we'll see, would it be able to get a bounce off of that? If it doesn't, then we're essentially looking for 32,000. Now you might ask, well, what about the new high? Yes, we are still looking for that. But remember, we were saying that we'll need to see how deep or how much more pullback the Dow Jones Industrial need to do before it get a bounce back up, because the Dow theory is still in play. Like I said, the market tells us what its intention, but it never tells us when and how. That's what we have to monitor, is the when and the how. Okay, so we just have to be patient and be careful. Now, also looking at the New York Stock Exchange Composite, you can see also putting a trend line here. It's still inside of this long-term price channel, but it's coming down to this trend line here. And let me zoom this in. And remember, we're talking about the possibility also coming down to test these levels here, right? These levels here, if it failed to hold this, this pivot high here. Remember, it's like a W, right? A double bottom, and it breaks out of this pivot high and make a run. So normally we see a little bit of a back test and then continue to move up if it is supposed to go up, right? But if it doesn't find support and breaks back below it and start moving back down, then that could be a fake out, and we be watching the slow that was supposed to be support, right? That's where it bounce off from. So we're going to keep an eye on it to see would it be able to find that support here near the 16,000. And if it doesn't, then we're basically looking for this thing to come down to this 15,775, 15,800 area, okay, and see what it get a bounce there. If it's not, then we eventually be monitoring to see how how low it will get or how close it will get to this lower price channel trend line before it see a bounce. Now let's take a look at the 10-year yield. Here's the TNX, which is the yield of the 10-year. And like I said in the past, the scale is basically just divide by 10, and that will give you the yield. So on Friday, it closed at 1.45% here. Okay. Remember, we were watching this zone here for a while. We were expecting the yield going to just chop around between this 1.53 to 1.76. As you can see from the Fed announcement, it broken down and came down here. That's a little bit surprising because the Fed announced that there'd be a rate hike, 2 of them in 2023. I guess the market is still thinking that it might not happen. So that's kind of wishful thinking. I'm not sure what caused the yield to come down, because I do expect it, eventually will come back into this zone and work back toward this 1.765. So right now, since it is on a down trajectory, so we're going to see would it be able to come down to this 14 or this 1.4 level and see will that be it, and then push this thing back up. And so we also saw the dollar, the US dollar, took a run at the 92 and getting into this zone here. So right now, I'm watching to see would it be able to actually get up to this 94 level, or will it basically encounter this resistance and pull back and back into the zone and work itself back down to this lower area of 89.74. Remember, for a while, we've been watching this area for this thing to chop between this 91.24 and 89.74. So right now it has broken out of this balance area and into the next area that could be the next balance area for it to maybe chop around and work itself up to the 94. But if the US dollar do get up to this high, that make or export more expensive. And a quick look at crude oil. Remember, we were talking about we're going to be watching for the possibility of coming up to this $75 a barrel. That's the target that I'm watching. And one would have thought that with the strong dollar, the oil price will come back down, but not quite. And also the other thing is, people thinking that, well, with the negotiation between the U.S. and Iran, and eventually it will come to some sort of agreement, and the Iran will be free to export their oil once again, and that will increase the supply, which they're already starting to do so. And once again, that would put pressure on the oil price. But right now, it doesn't appear to be that way, and I'm still monitoring the crude oil to come up to the 75 area. So we'll keep an eye on that, but you never know, right? It could easily just come down and drop to this $67 level here, right? So anything is possible, but right now we're talking about probability, and the probability looks like it's going to go more on the upside than on the downside. Now let's look at the silver. As you can see, silver also sold off with the strong dollar. And so right now we're basically looking at a break on this trend line. Essentially, it broke this 2667. Essentially we're looking for this thing to move up to this upper zone area 2950. As you can see, that did not occur. Instead, it broke down from this consolidation area, and right now it broke below this 2667. So what we will be watching is this 2471 level here to see would it be able to find some support and bounces back up, or would it just cut right to and come down to this 22.72 level? Now let's look at gold here. Gold really took a smacking last week, right? You see that it was sitting up here inside above this 1846, and what basically was watching this little bit of a chop to see would it be able to come up and take out the 1923 and then move itself up toward the 1960 area. Then with the change in tone from the Fed, we saw this sell-off here, and this sell-off is pretty dramatic and pretty quick, right? So it came all the way down and took out this long-term support here at this 1804, right? That was a level that I put up long time ago, and that was based on the breakout, on the weekly chart breakout on the upside, right? So right now it just broke right through it. So we'll be watching to see would it be able to find some sort of a bounce off of 1750 here. We've got this little bit of a break, right? This W or double bottom pattern here, and it came down and back tested. So, you know, before it even broke out, it did a little bit of a consolidation here for a forcible breakout, and then we see it came down and back test that and got a nice bounce, and that where you see that it pushed it all the way up to this 1923.70 before it started to come down and try to consolidate here for the next push. But then we got this announcement of the potential rate hike and all these good stuff about the dollar, and now we are looking at the potential of coming down here and even possibly get below this pivot level and into the 1700. So if it does get a little bit of a bounce here, then that would be one possible trade location to play it on a swing back up. But definitely, if it get down to this 1700 level, right, this 1700 level, then I would be willing to look into taking a stab at this to a swing long, you know, with a slight stop just beneath these low here. Because, but you know, once again, if it come all the way down to these low, then we could ultimately see it maybe work itself down to this 1546. I believe right now gold could be close to a buying opportunity here or close to it. Okay, so I am still looking for gold to come up to this 1960. Right, just watch this trend line here essentially get down to this level, right, or this 1575. I mean this 1750. You know, this area here. So we might see a little bit more consolidation, you know, before we see a bounce off of this these level here in this area. Okay, so keep an eye on that. Now, just an extra for those that are trading the SPY or watching the SPY. Remember last week I also mentioned about the 417 level, the point of control. That was the key level to watch when it was up here. Right, because that was the composite point of control, right? That's the price level where they traded the most volume, right, out of this entire period. Okay, so right now we're still looking somewhere around that 417, 416, 96 is somewhere around there. So it's 417. You know, it seems to be encounter some resistance here once it broke down. Okay, so right now, on these blue area, the shaded area, are some of the low volume zone that I have marked off. And those zones, I expected a price come down. We expect a maybe a rejection, so we're basically coming down and get a nice bounce of it, a quick bounce off it, instead of staying there and chop around. Or it just fall right through and go to the next, support or resistance level. So in this case, if the S&P 500, the SPY continue to drop, I'd be looking at 412.35 on the SPY for the next rejection zone, the low volume zone, to see would it be able to get a bounce back up, essentially, come down and get a bounce back up to this 417, 416 area, or would it just come right through and cut to it and come all the way down to this 410.59 which is also the value area low of this composite profile. So those are the downside target that I'd be watching for the SPY. And then on the upside, essentially, if we could get above this 417, then look for this 418.24 as the next potential rejection. Maybe a resistance and push it back down and chop around in this area here, center around this 417 level. Now, I also have put up this QQQ, the ETF for the NASDAQ 100. So again, what I did is I have marked off some of the low volume zone with this blue shaded area and the high volume zone with the little bit of a pinkish type of a shade. So you can see that right now it is coming down. Right? It is coming down here on this trend line here. Also join in. So essentially, I'm looking for this thing to pull back to somewhere around this 340 area, this high volume no, and we should see a little bit of a support and maybe it bounce around, chop around before it makes its next move down to the 336 or bounce back up to the 344. So in the near term, I'd be looking at this 340 area, 340 level. Then once that breaks, then I'd be looking at 336. So there you have it. The market is definitely doing a little bit of a pullback with the weakened AD line and the little bit of a more fear building in now on the VIX, and the put call ratio is getting up a bit. And definitely the market participants are taking some risks off and putting some hedges and also getting a little bit fearful. Thank you for watching, and be sure to smash that thumbs up to help me promote and share this video, and stay safe.